Hello and welcome to the Five Plan Partners educational vlog. This week's vlog is particularly intended for those of you who are retired and have reached the age of required minimum distributions. As we approach the end of the year, I want to remind you of a very useful tax planning strategy known as qualified charitable distributions. If you're charitably inclined and have not yet fully satisfied your RMD requirements for the year, this might be an option you want to consider. While charitable gifts are typically reported as itemized deductions on your tax return, QCDs are treated differently. They are treated as an offset to income before you ever get to the deduction section. So it doesn't really matter whether you itemize or take the standard deduction. You get the full tax benefit when you take a QCD from your RMD. While charitable gifts are typically reported as itemized deductions on your tax return, QCDs are actually treated as an offset to income. So it doesn't matter whether you itemize or take the standard deduction, you still get the full tax benefit if you make the gift in the form of a QCD. Now, in order to qualify as a QCD, it must be made from your RMD amount, and it must be paid directly from the custodian of your retirement account to your chosen charitable organization. If you want to personally deliver the gift to the charity, you can opt to have a check mailed directly to you, but it must be made payable to the charity. QCDs are a very beneficial option in the right situations, but there's one thing that you definitely need to note. When you receive the 1099-R on your account from your custodian at the end of the year to be provided to your tax preparer, there's not going to be anything on that 1099-R to call out that you've made a qualified charitable distribution. The custodian is not required currently to call those out separately or to report those in any way that distinguishes it from any other taxable distribution. So you're going to need to expressly let your tax preparer know that you made a qualified charitable distribution and provide any supporting documentation that they may ask for in order for them to report it properly. So definitely make sure that you make them aware that you have made that qualified charitable distribution during the year so that they can report that properly. As with most planning strategies, this is not a one-size-fits-all solution. It doesn't make sense in every situation. But if you think it might make sense for you and might be a good strategy for you, give us a call and let us help you make the right decision.